No news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So markets really didn't move. We were at a 53 yesterday and 53 here today. So fear and greed not moving a lot. You can see S&Ps did catch a little bit of a bounce. Still fear on strength. Breadth still hovering in neutral. Put call ratio neutral and volatility neutral. And then looking at the bonds, you can see safe haven demand in greed and junk bond demand in greed. So I think markets are really in a waiting period, looking for that clear direction. Moving over to the economic calendar, you can see core durable goods and headline durable goods coming in way better than expectations. The expectation was minus 0.9, ended up getting 0.7. Previous read was revised down pretty substantially from 2.6 down to 0.8, but still significantly better than expectations. And then you can see inflation data actually also coming in a little bit better than expectations at 10 o'clock. So data here today, pretty good. Maybe that's why we saw a little bit of a recovery from yesterday's pretty terrible day. Moving over to Max Payne, you can see it was 527, ended up at 529, so didn't move a whole lot, like I said. Did finish above that 525 level that we talked about yesterday. Top of the puts was up around 532, 533, so we didn't get a super bullish finish, but overall not bad. Put call ratio was pretty low as well, and we still didn't see markets sell off, so kind of neutral, waiting for some direction. Moving over to the charts, like we said yesterday, big down candle. Expected a little bit of a bounce, but couldn't recoup all of the losses from yesterday. Similar to 4 April, had a bounce the next day, consolidated, and then eventually broke down, and that's still what I'm waiting for. So you can see 4 days, 5 days of consolidation in here before we had that bigger move low. I think that's what we're going to see here. So no surprises that we got a little bit of a bounce, but I don't think it's going to lead to much higher highs, and you can see momentum continued to roll to bearish. Moving over to the tasty charts here on the 4 hour, you can still see those bearish conditions, basically flat. ATR stop at 536.41, still hovering below that 50 line, so that is a bearish trend. Lowest ATR sitting down around 523.71, so that would give you about 1.5% of downside potential, and I do expect that we're going to see that. And then down at that level as well, you have the 89 EMA sitting as another potential support line, but I do think that this is going to roll over in my opinion. Moving over to the Qs, very similar thesis. Had a bit of a rally, pretty strong actually. Didn't recoup all of the losses, but it did get back above the Wednesday session. Also hit that trend line here on the daily chart. So still inside candle, still looking for consolidation and a dip low, just like we saw here. Same time frame, same breakdown. You can also see that momentum continuing to roll to bearish, just taking its sweet time to do so. 144 EMA didn't quite get tested, so on the hourly chart you would expect a test of that at some point. That's down at 452.78, so it's about a 1.5% down move as well. So same thesis, looking for that down move to here. Then we'll start to see a push to that 21 EMA around the 442.84 area. Moving over to the Russell and the Dow, very different thesis here. So the Russell bounced just like everything else, hit the 21 EMA, still bearish momentum, so just an up candle. Would expect this to continue roll down just like we saw here. But Dow did not participate. It was actually slightly negative on the day, still bearish conditions here as well. Now that we're in bearish momentum, you would expect these to continue to roll to the bear side. We'll see how it plays out in the Monday session, but overall you would expect it to go lower. Moving over to the equal weighted S&Ps, it's been the same thesis. We haven't really talked about it a whole lot, but you can see high, lower high setup, big down candle yesterday, slight recovery here today, still bearish momentum. So again, you would expect this to roll to the bear side. Once you start to see that really roll to the bear side, there is more downside to come. The question is where? Are we going to double bottom at this previous low around 160? Or will we hit that 144 EMA down around the 157.92 area? Either way, it seems like this is headed lower. Moving over to stocks that moved here today, we got ROST jumping 7.79% to the upside. Big momentum, big volume, everything good on their earnings. And then you can see INTU having the opposite problem, falling off a cliff, 8.35% to the downside. Clear double top at that level. We are now back to the lows here from 19 April. See if that zone holds. Typically, you would expect it not to, especially after this long consolidation. Earnings couldn't push us higher. And if this breaks down further, you could absolutely see a move down to these previous highs back here from September of 23 and October of 23, down around the 550 area. Moving over to the Mag 7, the Mag 7 continues to look super bullish. So we hit that trend line again, pretty much closed right there. It's down a little bit after hours. Momentum bullish, RSI, overbought conditions at a 71.38. I would expect it to break down from that level as resistance, but if it breaks out, maybe the NASDAQ is going to go higher. I don't think these stocks can keep all of the markets higher, but maybe the NASDAQ. Moving over to Apple and Tesla, Apple inside candle, just like everything else, up 1.66%. Couldn't recoup all of the losses from yesterday. Momentum still rolling to bearish. I still think that's probably going to go further down. Tesla, on the other hand, I still like this setup. Still looks like a left shoulder, head, right shoulder potentially. Did get back above 177.70, so that's a little bit bullish after the touch of the trend line yesterday. So maybe this pushes back to 188.50, and if it does, you got 197.75 back above there as well. So Tesla seems to be in good shape. I still like this as a support zone, and this looks like a better setup to me than Apple. Moving over to Microsoft and NVIDIA, you can see Microsoft right at that level, 428.88. It did close above it just barely, but you can see momentum continuing to roll to bearish. I still think this is probably going to be a double top right in that zone. And then you can see NVIDIA continuing to rally here, 2.57. Momentum, RSI, everything still looks super bullish. It is overbought, but big earnings yesterday, and you would expect this to push next levels all the way up in that 1180 area. Moving over to staples and discretionaries, staples continues to hold in this zone. Both of them were positive, 0.26 and 1.01, but momentum on both of these still technically bearish, so I would expect them to continue lower eventually, just kind of a pause day here. Did hold the level, 174.76 on discretionaries. Current support on staples, 76.84, which is that 21 EMA. But like I said, still both of these are bearish in momentum. Moving over to oil and silver, you can see oil did catch a little bit of a bounce here right off of that lows that we've been wicking. This is the fourth time we've tested that level and caught a little bit of a bounce, up about 1% on the day. Momentum rolled to bullish a little bit. And then looking at silver, you can see inside candle after two really big bearish days. Again, two big bearish days could lead to a bit of a breather. Then we could see some more follow through. Zone of support down around that 27 area. So we haven't tested that yet, and I would expect to. Moving over to breadth, again, you can see slight positive day on both of these, but momentum continues to accelerate to the bear side. 50-day breadth now actually in bearish conditions. 20-day continuing to accelerate. I would expect these to hit oversold conditions. You can see even on these previous falls, move down, couple of days of bullishness, another move down. That is what I'm expecting here. It might be a little bit choppy, but I do think it's going to head much, much lower over the next couple of weeks. Moving over to the dollar, you can see we could not hold those gains from yesterday. Gave it all back, broke that trend line. Momentum still rolling to bullish, could just be a little bit of a pullback there on the dollar. You can see RSI breaking back below the SMA, which is not super great if you want the dollar to go higher, but you can see we are seeing momentum here on the hourly chart get a much better swing. Let's look at that for a second. You can see it here. Big move down, starting to roll pretty consistently back to the bull side, so you would expect this to roll up. It is holding a double bottom here, so again, could be a little bit bullish. I still think the dollar is going higher even with the down day here today. Moving over to the 2-year and the 10-year yield, you can see momentum still bullish, and the 10-year continuing to swing towards that bullish sign. Not quite there yet. We're at the 21 EMA, it is rolling down. I do expect these to continue to follow through a little bit more, but not too much more in my opinion. Moving over to bonds, you can see inside candle here for J&K, momentum bearish, and then TLT also inside candle, actually gapped lower and then rallied just a little bit. You can see it there, but still bearish based on yesterday's candle, momentum rolling to bearish. So might see a little bit more downside, which fits with that overall thesis in yields. Moving over to volatility, these continue to roll to the bull side 2 days in a row here on bond volatility. VIX very close to bullish conditions, did pull back to the SMA, hit this level. You would expect it to bounce from there. So we'll see how that plays out. I still think this is going to roll up, just consolidating, holding that same level, being patient on the VIX. Moving over to my accounts, I was down just a few dollars. It says I was positive, but I don't think I was. I think I was down about $9. Didn't really want to participate in this. I do think it's a short-term up move. You can see I do have some positions here for the Monday and Tuesday session. So some puts at 456 for 84 cents. And then some longer dated calls for that Wednesday session at 460 for $1. So slightly bearish in my deltas, being really patient. I think bearishness is set to come. And I think this was just a short reprieve from that down move that we saw on the Thursday session. So basically neutral with a slight bearish bias. Let me know down in the comments section what you think of the up move here today. Is it going to lead to higher highs, or is this just another consolidative day before we see that bigger down move? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.